So today, a very interesting moment that we are having a market updates. Unlike in the last 2 to 3 years when we are having a market updates, normally you are in a happy and joyous mode. So today, in a first time since 2021, we are having a market outlook in a not so good situation, although it has started 4 or 5 months back. Uh, so we will try to figure out what exactly is happening. We'll try to figure out why FI are getting out from the Indian market, when this bloodbath in the market will stop, and when probably we can have a revolve, and what you should look for in your investment going ahead from here. So before starting, so we normally have the same pattern that we follow. We discuss about global economy, we discuss about US economy, Indian equity market, debt, gold, uh, and we put a comment, ending comment to that. So before getting into the structured presentation which we have for you, I just want to give you some pointers at what exactly is happening in the globe so that you can have an idea of that. Firstly, for the last 6 months, we have seen a sustained FII outflow from the India. So today, as we speak, we are at 73,000 Sensex approximate, and a Nifty at 22,500 approximate level. So, which is barely like 15 to 16% down from what we seen in the peak in the month of August, September last year. So, and if we see the broader market, like that's what we are talking about, Nifty and Sensex. If we talk about the broader market, the correction has been much deeper, much deeper. Broader market means if you see the 500 index. So the primary reason for this is, I said in my last meeting also, and that in my meeting plus we have a one-on-one, seminar in Calcutta as well as in Faridabad, that the primary reason lies in FII pulling out money from India, and the last quarter, that is the December quarter earnings, is not good as per the expectation. And third, from 2021 onwards, Indian market has been consistently moving upward in one direction. So there has been a heightened price movement, and the earnings, which supposedly move in sync with the price, was not there. So Indians were buying that there is no end to it, and people are investing that they will make their money twice in 1 year, and so they're investing like there is no downside. So market was waiting for a reason to get corrected to its earning. And yes, the Trump factor, which we comes into place, we'll discuss shortly, give them a breather that yes, we got a reason, so let us correct it to the place that we should be. So earnings were not there in September as well as the December quarter. The reason of why earnings were not there, I have discussed in last month market updates. The basically because of the credit offtake, lowering of credit offtake, and because of that, you can see the corporate earnings fall flat. So just a minute, I just. Okay. Now, what happened in the month of September, October? We've seen that Trump is coming to the power, and this market movement started way before when the Trump comes into power. And Trump has categorically said in his election manifesto that he will do, tariff against different countries to be at par with their structure. Secondly, he said that he will be very, very strict about immigrants. Third, he will be slashing corporate taxes. So all those measures will actually lead up to the phenomena that US will have a higher inflation. Okay, so that will happen. But despite that, he was in a very phenomena of doing this thing. And remember always that Trump is a businessman more than a statesman or a politician per se. And the majority of his business, or rather, I will say the US election funding, is when coming from the Elon Musk and likewise people. So the tariff which he imposed on Mexico, Canada, and China as of now is basically primarily he wanted to make sure that the goods, the US company benefit out of it, but it will have an adverse effect on the US citizen because the inflation will go high as such. Now, when it comes to India, India accounts for 3.9% of total US exports, so very negligible amount, but still it's an amount. What Trump has predominantly wanted, that he wanted to have an access via Elon Musk in Indian uh, satellite systems via Starlinks. So Elon Musk wanted to have this Starlinks build up across India. He still wants, and that is why the negotiation has been going on in a largely, and government of India understand that, and he has government of India has outrightly, not outrightly, but he has said no to the Starlinks getting full access to the Indian satellite network. Because if you remember, in last 2 weeks back, Elon Musk has said that in Ukraine, if you see the Ukraine scenario, in Ukraine there is a two communication system works. One is there's a digital system that we have of their own, like data and telecom network, and second is the Starlinks, because Elon Musk company has given the Starlink access to the entire Ukraine, and it has been a phenomenal help for them in against the war against Russia. Now, Elon Musk has said that if you do not obey what why Trump has said and all those things, so we will shut down all the communication network, that is the Starlinks out there. So that's a big threat. So once the Starlinks come into place in Indian satellite system, it will have access to all the data of yours and ours and a country likewise. So it will be like in a today's era, we are totally data driven. Okay, data drives all of us. And if the Elon Musk Starlinks will have an access to that, imagine we are some way kind of enslaved by them. So the government of India understand that, and he has not say outrightly no, but he has a apprehensions toward that, and that is the reason Trump is doing a tariff systems with India. And obviously they want a Tesla car to be launched in India, which the government accepted it, and you will find that they have their showroom opening in Mumbai very shortly, or already opened. So in understand the Trump, the pestering, what the Trump is currently doing is pestering across the globe, and it is unlike to what Trump one was there and any other American president was there, because the US in India is very very not looking very great from the debt perspective, because there's a huge debts in US, and with the huge debts in US, some of them debts will actually get mature in next 2 to 3 months. So if you have a high debt, imagine if yourself has a high debt and you are giving a high interest for that. Now, if the country inflation goes high because of the tariffs, because of the immigration policies, because of other factors, corporate tax reduction, which Trump has already said, because he has his own set of people to to manage. Now the inflation will go high. If the inflation go high, the interest rate will also go high. Now all the 10-year government bonds which the US is having, if they are going to if they're going to reissue after a couple of months from now, imagine they will reissue at a higher rates, which will put a higher burden on the US exchequer. Already US is having a huge fiscal account deficit. Now add to this burden of extra interest, they will go towards more downfall. So that's a very catch-22 situation for US, and that's why Trump is pestering across the globe. In Ukraine, imagine, so give you more example about that. In Ukraine, Ukraine is very rich in uranium and nuclear energy, and very rich in minerals and all those things. So what Trump has said that, okay, I will give you access, but you need to give you military access and data. But for that, you need to give access to your natural resources. Same thing US is doing with the Afghanistan, which you will see in the days to come, where they have invested a lot of money earlier. Now they want access to the natural resources from there. And remember, they are doing the same thing with India vis-a-vis the data and the Starlink systems. So with Elon Musk with their hand, and with the infrastructure, data-driven capabilities that they have, so they want to capture all the natural resources from the globe, and that will help them to to somehow reduce their costing also. Why? Because US energy requirement is 36 times more than what India as a whole country is. Okay. Now they need these natural resources and energy to use that thing, and that they can get at a if they can get at a better deal, that's better. So that's why Trump is doing all those activities. And secondly, Trump you will see is more of aggressive kind of thing. So what we have known in from other data and all, like he wants to have some kind of constitution change in the US itself. Okay, and if that thing happen, he need a majority in both houses. So in that way, he actually need more support, more funding for those kind of things. So that is the reason. And secondly, he has spent a huge amount for his election also. So these are all things that he is doing, to help those people, business people who are there in his support during the last elections. So that's what Trump is doing. And as a result, you see a lot of companies have moved out from the emerging market and gone to the US. Last week, we have seen the SoftBank has promised to invest $500 billion to US in some business. They are moving out from India and other places also. So likewise, more of the FIIs, the foreign institutional investor, Trump has to satisfy Trump ego. They're moving out of different countries and setting their base in the US. Now, having said that, I always say that economics is much bigger than any individual. Yesterday, we have seen the huge market correction in the US. And why this thing has happened? Because if you have a higher inflation, if last 10 years, if you see the US stock market, it has worked phenomenally good. So if you have invested in US stocks, you have made a huge amount of money in last 10 years. Now, with the current bond yield of US, with the current inflation structure, and with the high debts and higher fiscal and current account deficit, US market is bound to fall. Okay, it is bound. It is a matter of time. Now, if that thing happen, now all the policies which Trump has taken will boomerang. Okay, and and you will see the FIIs who are putting out their money in US right now. They have to come back to the emerging economy. Okay, uh, so it's just a matter of time. And when the US market will fall, it has to fall, because if you see the price index in US out there, if you see the valuation of US market, it's absolutely high. So it has to correct from here itself, considering the overall US situation, which I told you right now. Now, if the US market fall, yes, uh, since the globally all the market is interlinked, there will have some repercussion in India. So you are seeing the market at 73,000 level right now. It can go down further from here itself, provided US market fall, and US market will definitely fall. So for the next 3 to 6 months, you can see a range which is much lesser than here. It can go as low as 30% from here itself. 30% not from the Sensex level, but what I mean to say that 70% of the market, which I considered that it has been corrected. So there could be another potential of 30% correction there. Okay, so 30% not in a flat term. So there could be, so if there is a 70% correction, so there could be 1/3 correction more that you can have. So if there's a 15-16% correction right now, you can see another 5 to 6% correction from here itself, which is a very, very much possibility. So that's what we are expecting in the days to come. Now we'll move on to our presentation, and we'll discuss the matters what we have told you right now in the presentation itself. Okay, so moving on, we in our structure formula, we are talking about the global economy first. Okay, so world, according to the Gavekal research that we have find out the data from, US market has outperformed the rest of the world. I told you earlier that US market, if you see from the 2012 onwards, the US market has outperformed the rest of the world. Okay, so this has been a phenomenal performance. They have the tax cut, the market forced, they acknowledge the scales, they have a stimulus post-COVID. AI excitement in the last couple of months has boosted the market. So this has been a performance across. US has a disproportionate share in the global market cap. Now, this is an interesting data point. Like, if you consider the total global market capitalization, US accounts for 66% nearly. Okay, India's share is moved from 4.5% to 3.9% right now in a global market capitalization when I'm talking about. So US, you can see the huge amount of US share in the global market cap. So that's why when I talk about the FIIs, basically is meant by the US FIIs. So far, US dollar seems to be following the trend of Trump first term. So if you see this Trump first term, what happened that this is the time when Trump was handed over by Obama. It has sharply increased to the tune of 10% and it has fallen down. The same thing is happening right now also. When the Trump comes into place, the US dollar will rise and then it will start falling down. So the trend has been more or less similar as of now. Is US dominance under threat? Now, that's a big question right now. Aside from the tighter liquidity environment and a dead rollover issue, what could derail US exceptionalist freight train? Now, capital spending stalls. Okay. Problem with Mac 7. So, look, all the Magnificent 7 companies like Apple, Tesla, Nvidia, and all those, they're having a problem. Now, you've seen the data from yesterday that Tesla is having a huge problem globally. Their sales, first time, has fallen down below 29% in the globally. And their sales is down in China also. Not only in US, in China also. US, you might have known that yesterday or in the last couple of days, there has been a unrest over Tesla showrooms. People are throwing, people are showing placards. They are destroying the properties of the Tesla. Some incident has happened. So because of what Trump has been stating regarding the Dodge effect, the Dodge Department of Government Efficiency, where they are having a cost cutting as far as the US employees there. So a lot of Trump has said that they have minimized a lot of employees from the different organizations. This has actually created a ripple effect in the US, like people are losing their jobs. And the vested interest has also come into place in that case scenario, because he has stopped funding to majorly one of the major economics as well as the major countries like Bangladesh, Pakistan, some of the left wing countries also, and this has impacted them. So probably this can be a stage managed kind of thing, but this will have an impact. Okay, plus what I mentioned, that he has been very aggressive towards Ukraine. What you have seen with the Ukraine-Russia thing, which actually upset the European Union also. So these all factor will actually leads, when you mix politics with business, this actually happens. So apart from that, there has been an increasing number of competition coming from the emerging market economy, and that's why the Magnificent Seven, what we used to call, they are under real threats. Last month, we have seen what this company, Chinese DeepSeek, what has they have done in the US. A DeepSeek is an AI tool which they have come up in the US, and within a span of 10-15 days, it is the highest number of download. So that's what is getting impacted globally. Europe actually started to do better. As a long point of time that they have started to doing better. Interesting phenomena right now, if you see in the globally, that you can see that most of the countries are having a right-wing parties in the government. Like US, we have a Trump. India, always you have a Narendra Modi for the last 10-15 years. Germany, they have, so most of the countries, if you see, they are having the right-wing parties coming into the power. And when there is a right-wing parties coming into the power, what happened that these parties, if you have a right-wing mentality, they are basically more of nationalist. Okay, so you will see made in India, made in US, made in Germany. This will actually be a more going ahead rather than having a global connect with this thing. So that's why we have this tariff wars and all those things are coming up right now. So that's what is happening. So that's why I'm saying US dominance is under threat. So China actually started doing better. Maybe the new things is not the US but elsewhere. Okay, so US has been in a dominance for over a long, long time, for centuries plus. So that has to change. The shift has to change, and someone has to change, be the catalyst for doing that. I'm not saying Trump is that, but the data which we have seen is a gradually shifting towards that level. So now back to the US, we see the Fed is maintaining a very delicate balance between growth and inflation. Now, interesting thing is that I've been talking about US inflation for a long time, but first time in last month, we have seen that there is a slight dip in inflation number in US. The Trump will be very happy to see that thing. Okay. Will US non-farm payroll weakens? So that's the kind of thing. So there has been government plus government education and health job addition accounts for 70% of payroll creation, down from 85% in Feb 2024. Okay, so payroll obviously will have a issue going ahead in US. because they will have to cut cost uh, aggressively, because their fiscal and current account deficit is going to be huge, which you should see the data in coming days. So they will do all the measures possible to reduce their cost. Okay. So, and Trump tariff policy break global growth. So a couple of the paper highlights are here itself. Trump pulls his serious on tariff as Trump threatens wider trade war. The U.S. confront Trump trade chief advocate strategic decoupling from China. So, well, Trump will obviously go and do this tariff, but how well he can able to continue that, that's the economics will tell. Because I told you, economy do not depend on any individuals. When the market will start falling down, already it started falling. If you see the US track record for the last 2 to 3 months, you will start noticing that the market has started falling. If it will fall further down, then obviously this factor Trump has to revisit and do some tweaking in this policy initiative or dialogues that you're doing right now. US tariff set to rise at 18% under Trump, highest since Great Depression. So this is the interesting data written for 1930 to till date. Now, in the Great Depression, the US tariff was the similar level what Trump is trying to achieve right now. So imagine what is going to have an impact. You see that graph, the tariff of US tariff has been always been lower, because if you are developed nations, that is means that you need to be take care of all the other countries also. But as I said, the right wing parties are coming to power. They will look for more of nationalist approach than having a global impact kind of thing. But anyway, that's Trump what he's about. So US tariff is set to be in a Great Depression level. That's what I'm saying. Your federal deposit has remained elevated. See, in 2024, it was huge. This is high because we know that time we have a COVID time, but it has been always lower. See, this has been lower over the years, but it has increased. And with 2025, I'm expecting it will go further down itself. Okay, so that's what US trade deficit, you have to data figure out. Trade deficit is important, federal deficit is important, because in a layman terms, if I discuss that, if you have your own household deficit, how will you feel that you have to take extra loan? Okay, so that's what exactly US is doing right now. So another data point, US national debt surplus is 36 trillion. I told you about the US debts. Now you see the data here, debt per citizen, $107,367. Okay, so US federal debt to GDP ratio, see, in 1960 it was 53% and now it is 123%. So that's what I always mean to say. This is a Dodge clock, US federal spending, and this is the budget deficit that they have, and they are planning to save out of it. So that's the what we talk about US as far as the debt is goes. Now, lower rates needed to service higher debt. I told you earlier, because there are a couple of long-term bond paper is going to mature in 2 to 3 months from now. The US need to lower the rates. Happily, for the last month, they have a slightly lower inflation, but how long that will remain, we don't know. If that not remain, there were no other options to increase the rates itself, which will have a very counterproductive as far as the debts management of US is concerned. Global PMI is still weak. Global commodity prices has relatively been benign. Emerging trends of CY25, the release of DeepSeek, I told you about, shattered three deeply hold belief. It shattered belief that China could be constant technologically, remind everyone that capitalism being very, very big usually is a hindrance to being efficient. It's put into question the prevailing view that semiconductor spending is now more structural than cyclical. The Dodge cost cutting is seem to be real. China is now in a proper bull market. Yes, this is an important data point. Like another point why FII is pulling out of money. Now, FII do not have any fixed, romance with any particular country. Wherever they get money returns, they will move to that. China, if you see the last 2 to 3 months, their market has started reversing now. China is actually in a bull market right now over after a sustained bear market for the last 10 years kind of thing. So most of the FII who are pulling out of money, they are predominantly either going to the US or investing in China. Okay, so why China isn't a bull market? Because they have taken steps as far as the real estate is concerned. And they have actually pulled out a lot of pull in, a lot of money into the market. and they have all the real estate property, which we used to tell that, if you are regular in my seminar, webinar, you can understand that last 1 year we have been saying that the Chinese real estate market is a huge gap between demand and supply. Lot of the real estate product are being unsold. So Chinese government understand that, and they have actually put in a lot of emphasis on that segment, and they have make sure that the money, the real estate players that they have adequate money to survive, and they actually made available to this real estate at a reasonable cost, and make sure all the real estate stocks, the property stocks that they got sold out in the market, whatever rates that are available. Okay, so it's a very interesting story about Chinese revival. So you can know it later on from me personally, because that's a total chapter altogether if we discuss about that. But anyway, Chinese bull market is a reality right now. Okay, threat of tariff and era of US dominance changes global landscape. The Milei's success changed the equation in Latin and perhaps the world. Chile, Peru, Colombia, and Brazil all have upcoming election in 20 months, and we will witness a big rightward shift. Right now, it seems somewhat likely. So, as I told you, there has been a right-wing shift right now in the globally happening. Already, many countries are there, and with these countries coming up, you can see a more right-wing shift, and that will actually make more countries more nationalist, and the global connectivity will perhaps be more of we first and then the world second kind of thing. But anyway, moving on. If we see the highs in yield, have we seen the highs in the US dollar? So this is the US 10-year yield versus DXY index, more or less moving in a sync with each other. Release of DeepSeek has shifted the relative momentum to China. I told you earlier. Okay, so China, I told you right now that China made a pivot, real estate versus industrial lending. So if you see everyone focused on the real estate, when is that now reshaping our world? So this is the industrial sector. Now, this is the important data that as far as the real estate goes, that's why I'm saying that China is having a shift in the real estate. Is momentum is actually revival is actually based on the real estate struggle, real estate boom, which has started seeing in the country, and which has actually been based on the industrial sector lending in that kind of thing. So this is a chapter which I will probably make a small video of it and share it to you separately, so that you can understand how China has actually revolved in last 2 to 3 months from what the government policies has been taken from there. And that can be a good case study for a lot of countries where real estate are struggling for so many years, and a very good phenomena for how to boost their economy kind of thing. China leapfrog in automobiles. Another interesting data point why China is moving out apart from real estate. See the data. Export of passenger car in China. So this has been a phenomenal growth. If you see the red line out here, it's a phenomenal growth of China's automobile export. Germany, Japan, South Korea, US, all the big names which are there in automobiles, they are way lagging behind of China right now. China used to lag behind all of these countries earlier, but now it is on the top as far as the passenger car export is there concerned. Gilt yield US versus China. So this is China's 10-year government yield, and this is US yield. Now, this is another interesting data point. Now, China's 10-year government bond yield is 1.73%. US is 4.25%. Now, this slightly fall has happened because of the last month interest rate going low. But still, it is much higher. Why this is important is that, so if you 10-year GSEC, if you're taking a 10-year GSEC of China, so they will have to spend less because they have a yield is 1.73. Whereas in US, since the yield is higher, the government has to spend much higher. So the ability to mobilize more fund, obviously US will have, but they will have to spend more if they want to raise more funds kind of thing. So that is the very challenging thing, where easy availability of fund for the Chinese will always be there, as well as they will have a lesser interest burden from them. Okay. Moving on. So there will be a US-China summit, and which are expected to have a trade war from April 1st. Now, what will be the Trump likely plan? On April 1st, release the USTR and USC trade reports and tariff recommendation. Beat China up for a month, go to the Beijing and negotiate with Z large parcels of US Treasury. What Trump is going to address, because you can see there's a shift moving from US to the China. And if the Chinese market started performing, you will see all the FIIs were moved up to the US. They will gradually, not right away, because Trump is over their head right now, they will move towards China. So what Trump is negotiating probably will see is that large parcels of US Treasury. So if you buy large US Treasury, although you will have a higher interest rate, but US will get a funds. They already have a current account fiscal huge deficit. They can mitigate out of that. Sale of the Panama Canal, no more port investment, opening of factories in the US, and revaluation of RMB. So opening of factories in the US, that Trump can tell to Z that open your factories in the US, that can, can push for. Z likely response will be non-confrontational. Z probably not so worried about tariff, but likely more worried about US capacity to create an anti-China coalition. However, the more Trump pokes allies in the eye, the more risk of diminishes. No issue for Z in twist henchman arm in selling Panama. Okay, so but probably if you see the Chinese balance sheet, government balance sheet, there's a huge reserve right now. So the higher tariff, although China is saying that it will be counteractive, they do not accept it, but they have a huge balance right now as far as the forex reserve as well as the gold reserve is concerned. And that is why from the 2017 onwards, Chinese has been consistently buying gold. And if you see, 2017 is a very interesting year. That is the first time when US GDP was under its debt. So I show you the data, GDP to debt ratio, which is currently 125%. Actually, in 2017-18, it started moving up over 100%. And that is the time the gold price started soaring across in the world, because China, Russia, India, they started accumulating more golds right now. China debt burden is higher than the US and Eurozone, but it has a lower interest rate. I told you in the last 2-3 slides before. So it is a manageable. China's consumption as share of GDP is abnormally low. See, this Chinese consumption share of GDP is, so here it is a China vis-a-vis the other country. Chinese government can intervene into the market. So I will quickly move on. Investor confidence remain high. Okay, so we are discussing about Chinese model right now. What will the investor do, right? Investor choose. So Chinese equity market, US equity market. If you see the policy, Chinese equity market, they have an easing fiscal and monetary policy. US equity market, government tightening is built, uncertain monetary policy. Momentum, both have a strong. Chinese valuation is massively undervalued. That's why I'm saying Chinese look very attractive as far as the market goes, while US is overvalued right now. Why Chinese undervalued? Because of the base effect. Last 10 years, price of the stocks has hardly moved, but US, it has been consistently moving for the last 1 year, and so it has remained in an undervalued segment right now. You see the automobile export of China, it has sharply increased over last 2 to 3 years, as well as more sectors, which you will see in a presentation going ahead. Chinese production has increased. Valuations, bottom quartile, top quartile, ownership massively under-owned, massively over-owned, bond yields record low, decent high. Can Europe surprise? Well, Europe is likely on the verge of renewal fiscal stimulus. So I just quickly moving with the slides. Can technology surprise? So this is the time, what I mean to say that 1980s was a time when country and company, I told you what are the top 10 largest company by market capitalization during each decades. So in 1980s, you can see mostly US. In 1990, you can see it is mostly Japan. In 2000, it is mostly US. And then in 2010, the country of China has mostly taken over. And now in the last 10 years, 2014-15 onwards, it has mostly been US company right away. So as far as the market capitalization goes, now you will see the shift will change from 2025 onwards. So that's what we discussed about the global economy and the US economy. So on a nutshell, I can only say that in a global economy, US is under stress as far as the high debts, they have a high fiscal deficit also. They are doing a tariff aggressively, which is equivalent to the Great Depression era. But tariff will not only impact their inflation, which we feel that it can impact their stock market and economy also. The stock market understand that thing. It has corrected a lot in the yesterday, and you will going to see the US impact going happen in the next 3 to 4 months. Always remember, in a stock market, the market react first. Okay, whether it is a bear or bull market, the bear market react first, and followed by GDP number, followed by the earnings number. So earnings come in the last. Okay, so market always go in a future, market always trade in a forward, so market expected anticipate that thing happen. So that's what is going to happen in the US. So let's talk about Indian economy. So we have seen in a global perspective, although most of the FIs are moving toward US, but economics, if it's turned to be true, the US market has to come down, the ripple effect of which will remain globally for a quite few months, but it will settle down then, and then FI will again come back to the emerging economy. Now let's see Indian economy, how it is moving. Now real GDP grew 6.2% in Q3. Manufacturing PMI slowest expansion. WPI inflation eases to 2.3% from 2.37%. Okay, repo rate cut, we already know which has happened there. India, the fastest growing economy. So if you see the rank wise, I've given the world total rank wise number. So this is the GDP in 2014 15 to 2025. So you see the India's growth is 77%, is one of the highest in the world. So okay, India's growth recovers, but for a long time to go. This is a GDP quarterly growth. So any GDP growth below 8% in India is not good. So even if you see the data that moving from 5.6% to 6.2%, it looks good, but it is not good, because with a country like India, where there are so many population, if the GDP growth is not 8% plus, it will have very difficult in giving employment to all person, to increase the per capita income of all person. Moving ahead, GDP forecast to remain between 6 to 7%. Well, government has to do a lot, because they are already in budget allocation to more of the infrastructure segment. So you're going to see that thing happen. So government focus will be more bringing this level to the 8% level. So this is the focus for the Jan Feb. Economic activity shows growth pickup sustaining. Better monsoon bodes well for the Indian economy. Indian rural demand continue to outpace urban demand. So that we know out India Inc. has strong free cash flow and healthy balance sheet. So this is the if cash flow as percentage of sales. This is the net debt at EBITDA. So we have the debt to EBITDA, earning before interest and tax and deductions, has been lowering, which is a good. Key highlights of Modi-Trump summit. Now, US and Trump, you all know that Modi and Trump has a summit last month, and US-India trade to double 500 billion by 2030. India to increase oil and LNG import from US. A 10-year US-India defense cooperation will happen. Increase US investment in Indian infrastructure, high-tech and semiconductor manufacturing, and US-India commit to reduce China's influence in trade and security through Quad 12 UC and IMEC. Okay, so that's what happened in Modi and Trump. Oil prices are falling amid weak global demand. GST collection is lower in Feb than anticipated, nominal GDP of 9.7% for the FY. So this data is important, because when you see this data, the GST collection, you see, I told you last two September quarter and December quarter, earning was low, and exactly the GST collection shows that. So this GST collection number, so how to know what will be the earnings of the corporates? Interesting aspect is that you check for the GST collection month-wise in India. So this is the two time when the GST collection it was lowest in India, and you see the corporate earnings was also lowest. Now we have seen in January and February a little bit lower side, but January we have a highest GDP number. Okay, GST collection. So with this number in place, with the closing of March, you know what is going to happen with the earnings of April. And if the earnings April is good, is as per the expectation, as well as if the earnings for April, May, June, July earnings is also is as per expectation or beyond what we have last year, then we will have a better uh, you know uh, base effect, and then you will see the market will react in that way. So one is a US factor, which I told you right now, when it will normalize, the FI will come back and everything. And second is this number. We don't know the earnings number till the month closes or the quarter closes. But if you see the month-on-month GST collection, you will be able to understand what exactly is happening with the earnings of the corporates. Okay, so number is interesting, and it will actually give us a hint that by the end of March, April, and by the end of June, if the numbers are better as far as the GST collection goes, we will have better quarterly results of the corporates, and that will actually impact the earnings of India. Okay, and last year we know that the earnings was less, the base effect was less. Because of the lower base effect this year, with the earnings higher, expected higher, you will have a better market performance going ahead. So probably till the time of June, July, you will find FI will come back strongly in India from there on itself. And 2025 will be a little bit subdued, not like what you have seen last 2-3 years, but 2026 will be a great year for investment kind of thing. So for the return kind of thing. Obviously, if you have funds right now, what I will recommend is that invest in 3 to 4 months, spread your investment 3 to 4 months in this period of time. So February, March, April, May, June. So spread apart your investment in 3 to 4 months and wait for 2026 to unfold, where I am expecting Nifty to just 30,000 anytime in 2026. And that is going to happen solely for two reasons. One is a US factor. I told you why the FI should come back to the emerging economy. And second, because of the lower base effect of 2024. 2025 results will be better off, and which will you see the results, the market movement in the 2026 itself. Okay, so that's what I'm going to expect. So for the next 3 to 4 months, because of US market correction, because of global factor, because of earnings, you have to wait till the time of June. Market will get a little bit of corrected and will give you a very attractive entry point right now for the next 2 to 3 months. Moving on, jump in outflow, wipe out net FDI flow. This is the not FDI inflow and outflow. Obviously, it's been FDI outflow is higher. State government has turned more populist. So these we all know that we have a Beti Bachao, Beti Parao, Ladli Bahena, which is normally given by the different government, like Maharashtra, Telangana, West Bengal, Karnataka, and Madhya Pradesh. They all give this Ladli Bahena monthly transfer to the people's, to the woman, basically, which actually put a lot of pressure on the on the government. And this will have a very negligible impact, but it will have an impact on in the overall budget of a country. And that's more important, because once we have a budget surplus, or a better budget deficit number, then actually you can plan a lot of amount of things. RBI intervention lead to USD 65 billion decline in Forex reserve. So that's what we have, a little bit of decline in Forex reserve, but it is still pretty healthy from what we used to have in 15, 16, 17. India's 2025 economic scenario. So I just quickly move. I already told you about the scenario. Now let's talk about the Indian equity market. Market capitalization GDP ratio, which we used to say, now it is much, much lower than what we used to have in 2024. So we are not very cheap, but we are not very, very costly right now also. So there could be a bloodbath. There could be some pain in last 2 to 3 months. The average market cap to GDP ratio is 87% in India, which is right now we are at 100. So probably with next 2 to 3 months, you will see this number pulling down much lower and touching the average. And that what I mean to say, that we are in a very attractive position right now. For the next 3 to 4 months, you just have to spread your investment and wait for 2026 to unfold. Okay, Nifty 30,000 level is a reality in that time. Market cap and PAT, you see the number, market cap and profit after tax both on the upside move. So 2022, 2026, 25 data, you see this is the 2026 expected number, which is higher side. This is the market cap, and this is the profit after tax. See, this is a huge movement. Last 10 years till 2021, and then 22 to this expected 2026, the numbers you can see. Now, talking to the valuations, now Nifty we have exactly at a 10-year average. Okay, probably in a 15-year average, it is we are cheaper in Nifty as far as the valuation goes. Mid cap index, which has fallen from is top line at 35 to 27% right now, and small cap index which has fallen down to nearly its average level. So large cap is discount we are getting right now, mid cap 11% premium, and small cap 18% premium. So that's what we are having now. This data, if you see, if once you see this data, you will find that okay, large cap is attractive. Now I have a very different perspective in this kind of thing. Yes, most of the fund managers, YouTube, social media, and saying that large cap is attractive, keep on investing there. But when I say that the right wing parties are in India, right wing parties are winning across the globe, that means you will have a more nationalistic approach. Okay. And that's where the mid and the small cap companies make in India, this type of companies will actually grow more. So with a and secondly, large cap companies are having a higher base, and a small cap company are always with have a lower base. So when you have a lower base, the percentage return tends to be higher with a slight improvement in number also. So that's why I'm saying that if you have funds right now, do not put all your money in the large cap. uh, Interesting data point I will show you, that the FIR start putting in a small and mid cap also in India. Okay. With its percentage coming down, I'm not saying that the mid and small cap will not correct. It will correct. Even the large cap will also correct from here itself. I will not say correct. Large cap is already a discount. It can go down a little bit till the time of June, till the numbers of earnings results comes in, and the Trump factor and all the FIs start coming back, and the US market fallen down and stabilize. So small and mid cap is attractive. So if you're looking to invest right now, spread apart your investment in 3 to 4 months, spread apart your investment in large, mid, and small cap also. Which company to choose, which sector to choose, you can drop me a message personally. We'll discuss it out offline and take it forward from there itself. Now, earnings FY 25 snapshot in line with the modest expectation. So this is the actual growth. This is the PAT, profit after tax. This percentage I have given. Now, this is important. Earning expected to remain robust with market cap follows. Now, this is the EPS, earning per share of 2025, and this is the earning per share of 2026 expected number. So we are expecting a growth of 13% in 2026. Now, if you see the quarter 1 to 3, this is the number that we have got, and quarter 5, this is April, January, February, March, we are expecting this number to come up. So this will probably achievable. Now, next year, which we are projecting a number of 1172 EPS, Nifty 50 companies, so which is about 13% from right now. So which is higher than 2025. So if we have a higher number in 2025 than 2025, you can imagine where the market will grow from here itself. So that's why I'm saying Nifty 30,000 by end of 2026 is not very absurd number for me. But the next movement, next recovery, you will not able to catch hold of that thing. So that's why I'm saying if you have funds right now, put your money in 3 to 4 months, spread apart in different sectors, in different segment altogether. Start putting out of it, because you will not know when the bottom will there. Having said that, I already told you, do not make sure that market will move from here onwards. The turnaround will happen right now. Turnaround will go a little deeper from here and then move up. Probably next 3 to 4 months, you can see a more correction from here itself. But don't wait for the bottom, because you will not able to get hold of the bottom from here itself. You got a fantastic opportunity to re-enter into India at 72, 73,000 level. Probably market can go to 66, 65 also. We don't know. Exactly, we don't know where is the bottom of the market, but this is perfectly a right time to enter, not at one go, but in 3 to 4 months period of time. So moving on. And those who are already invested in mutual funds or in shares, and those who are already doing SIP, like monthly investment or systematic transfer plan, keep doing that. Do not shift, do not switch to any other fund right away, because if you are doing SIP and STP, your average cost, you are buying at average cost. Okay, so average cost will be lower with each time you buy at this rate. So the last 5-6 years average which you have bought, it will come down at level right now. So do not stop your SIP, do not switch your SIP, or in a fear that market will go further down. So what we will do, so we'll stop and we will get hold of the downfall. Don't do that. Let the market fall a bit. Let your average purchase price get down a little bit from here itself. Okay. And as far as the lump sum investment which you have done in stock shares, if you have invested in lump sum in stocks, get hold of the stocks which we are investing. Take care of the stock valuations perspective. So you need to know which stocks you are buying, which you are holding right now, its valuation. If it is valuation look attractive, don't don't get bogged down by a little bit more correction of it. If the company valuation doesn't look attractive, it is still overvalued right now, you have to book loss in that case of scenario. So as far as the stock goes, look for its valuation right now and then take a position. And if you think that the valuation is attractive, take an average out right now in next 2 to 3 months in the particular stock, but don't book losses right away. But if the valuation is still higher, if there were losses in that thing, book loss in that kind of scenario. For mutual funds, for lump sum investment, not via SIP and SWP, normal equity lump sum investment, although it hasn't corrected a lot, if you have a 5 to 6 year of duration, don't worry, because the churning inside is automatically happening. For the next 6 to 7 months, you will see the level which we have seen earlier itself. Okay. And but if you have a corpus, like you need money in next 1 or 2 year kind of thing, then you can take a call and put out the money right away and park it in a debt fund category to curtail more losses. But I hope if you are looking for a funds in next 6 to 12 months kind of thing, you should have a plan earlier for an emergency fund perspective. Okay, so moving on. FIS record second highest ever monthly outflow in the equities. I told you earlier the FII outflow are large but not substantial. So if you see the FII outflow from Jan 2028, Jan 2008 till now, we are, FII outflow, see the numbers. Okay, and outflow is a percentage of average market cap. So this number is important than this. Okay, so if you see the $1 billion, it might look higher, but if as an outflow of average market cap, we are still very low right now. Now, if ownership of BSC 100, now this is the interesting data. Like currently, FII used to hold India to the tune of 21 and 22% kind of thing. Total Indian market cap 21-22% FII hold. Right now, it has fallen down to 16%. So there's very little scope for further FII going down from here itself. Although it has been moved up a lot, and the data in the February month, what we have seen that FII downflow has been less. Okay, FII downflow has been less in a February, which actually indicates that there has been a lower, lowering of outflow, which has started picking up. It's actually started from the August onward when there were aggressive FII outflow, which has started slowing down a little bit from here onwards. So obviously the same reason, like FII percentage right now it's 16%. That is one of the reasons for that. Okay, it's come down from 21%. So moving on, 1/3 of free float ownership remain with the FII. So that's the total Indian equity ownership percentage of free float market cap. FII ownership of SBI highest levels in March. DI monthly outflow in equity continued to be robust. DI domestic investors. DI is Amno to take FII sales. Rise of MSCI emerging to S&P index lowest in March 99. India share of global market cap. I told you Indian share of global market cap has dipped from 4.6% to 3.06%. I told you 3.9, but it is 3.06%. Remember, US share 64%. India is 3.6% of global, market cap. India valuation premium over emerging market below average. Indian valuation premium over emerging below average. So below 5-year average. So this is actually Indian versus emerging market PE premium. So we are below average right now as far as the emerging market premium they are. So the good correction that we have, a lot of people are worried about the corrections that market will fall down. Actually, we are getting in a cheaper range right now. It can go a little bit more for the reason which I told earlier, but nothing to worry because we are getting at a point. One thing which we are telling technically, as far as the technical aspect goes, like if the Nifty crosses 21,800 below, then we have a near resistance at 18,000 level. But that, I think, with 22,500 level, it's little bit stretched out. We not expecting an 18,000 level right away kind of thing. But April is a very interesting month to observe for two reasons. One, what tariff will do with Trump with vis-a-vis India. You know why Trump is pushing India a lot. I told you about the Starlink link. And secondly, because of the tariff, full edge tariff systems is prevailing from the 1st April onwards globally for the US. So that's become a very important aspect. And third, the earnings of the quarter, of the last quarter of 24-25 will be coming out in April. So these are the three interesting data point in April. So that's why I'm saying, if you have funds right now, do not put out your funds extremely entirely into the equity market. Wait for the April to evolve. So put some money right now, put some money for April and May onwards also. FII holding on Indian, so this is the data I'm saying. See, the Indian FII holding Indian equity at 16%. It is lower. It is very, very lower. It's actually in July, June 12 level itself. Where will you invest? So this is CSI 300, S&P 500, and Nifty. So if you see the EPS growth in last 10 decades, you see the EPS growth in India, it is 180%, whereas in S&P it is 124 and CSI is 36%. So with this kind of EPS growth, don't you think that if I are going out of India will come back to India very sooner? Okay. Moving on, growth as per market capitalization. So the data says it all. I just not take much data from here. Many stock are delivered return. This data is from 2020 to February 2025. Many stock are trading as expensive valuation still. Okay. Although Nifty, you see a discount, but there are a lot of stocks which are trading at valuation. So that's why I'm saying, if you're investing, whatever the stocks that you're holding right now, that is important. What is his valuation? If the valuation is higher, then you have to think, okay, but if you have a 4 to 5 year duration, don't think much. But if you do not have that much of duration, if you cannot accept more losses, then book profit if your stocks which you're holding at an expensive valuation right now. If the valuation is cheap, the stocks which you're holding, and you see there's some correction happening, don't worry. Instead, buy some of the stock itself, if the stock is worth enough to buy. So moderate market expectation, significantly I move on. Be ready for volatility. I told you earlier about this. So we have been neutral weight towards equity, large cap, mid cap, and small cap. Price is what we weigh, value what we get. Nifty 500 index calendar versus intra-year drag down. Sector and the valuation, this is an important data point. Like, see, automobiles price earning is less. So we are cheaper in automobiles right now in India. Oil and gas, we are also cheaper. Consumer, we are also cheaper. So this is, as an industry I'm talking about, stock specific, you have to check. Okay, so these three segments are cheaper right now: automobiles, oil and gas, and consumer, as far as the valuation goes. Now, private banks, already we are very cheap right now. And so you see the PB and the PX. Okay, so in bank we don't see PE. I told you in my equity share training, we do PB. So PB looks very cheaper right now in private bank. Capital good, expensive little bit. Healthcare little bit. Metal and technology a little bit expensive. So technology, we are still expensive. So those who are holding technology stocks have to check individual stock that you're having and take a decide on what we have said earlier. On equity, so equity views I've already told you. So that's what we are talking about. Indian equity. Debt market, we've already quickly moved that US inflation stays firm. It has shown a slight dip in last month. Okay, cumulative 50 basis point cut in FY 2025. So there could be a rate cut because the inflation dip surprisingly, which is Trump will be very happy for that. And if this continues, okay, so Trump can have a rate cuts because Trump is more of business oriented than what we have in likewise. But deeper inflation cut in US doesn't look to be happening in days to come because of the factor what Trump is doing right now. RBI announces liquidity measures. I just quickly move this data. Indian CPI inflation 5-year low, considering investment and duration. So gold as an investment, so moving into the gold. So gold, which you have seen a highest amount of return in last 1.5 years. So what we are expecting is that gold is an all-time high level. And if you are willing to invest in gold, you can do so, because China, India, Russia will keep on continuing gold buying as a result of turmoil US economy. But gold is an all-time high right now, and the asset class which is an all-time high right now, you should be avoid buying it in aggressively. So if you have gold as an investment looking for, it has to be on a strategic purpose, like 10% of total asset class that you hold. Okay. Okay, emerging market demand is driving the gold price higher. I told you about this thing. Okay, China continue making covert gold purchase in London. Uncertainty in tariff leading to gold shortage. As US and USD rose, so did gold. Okay, so I will not take much time in gold. I already told you. Now, important data that we have seen some scams happening in India. Taurus jewelry scam, which are in crores in India, which has happened. So beware of investing in different scams like 5% annual return, 5% monthly return kind of scene. Sorry, don't invest in those kind of schemes. Uh, so this is the time when actually you're not getting returns from the market. A lot of schemes will come into place, like 5% monthly income, jewelry scheme, this monetary scheme, this policy, that investment scheme. Don't go for that. What Stay to what data which I have provided to you, and stick to the basics in that kind of scenario. So this is some kind of loss harvesting which you can do. Why? Because a lot of people has paid advance tax right now, but you will have a capital gain losses this time. So you can actually make a capital gain loss this time by booking, your stocks and mutual fund, and buy it at a lower range. And if you have a capital gain surplus, you can actually adjust that. So that's your tax consultant, or you can contact us separately to how to use this time to do a tax loss harvesting kind of thing. Okay, so that's a new kind of aspect that we are talking about. So do let us know if you are having a higher capital gain in last 2-3 years. We can adjust this year itself by having a capital loss kind of thing. Okay, so annexure, global 10-year yield. We can see this thing. Domestic, I just quickly move on. Most of this thing I already told you. I know these are sectoral performances. I don't know, the Indian sectoral performances was not good enough for the last 6 months, which is evident. Global performances. Now, this what I mean to say, that Nasdaq. You see the Nasdaq performance in 5 years is highest across all global, and you see that last 3 months has started falling down. Okay, that's why I'm saying the US market will see started falling down. Similar with the Dow Jones Index, industrial index also. So that's all from my side today. Thank you very much for attending show. And Ashish has said that, can you share something briefly about Middle East, like UAE and Saudi Arabia trend? Do we have high levels info about that? Well, Ashish, not in a scope of this today's discussions. I will take it up with you separately. And that's all from my side today. So thanks for attending my session. And we will have this session